Hello investors and traders, today I'll speak about the stock market technical and fundamental analysis of the US economy. So let's start with the S&P 500. We will see that now it's traded at a level very close to 4,000 points. So actually it's the same level as the beginning of the year, and the S&P 500 is up since January only 3%. So actually it's here, we traded here, it's last 3 months it's a range and nothing special happening here. I'm still expecting to see the index a little bit lower, in my mind here decreasing, expanding leading diagonal. So it was the first, the second, the third, the fourth, and most probably we may see the fifth wave here. Anyway, I'm expecting the stock market, the main indexes, to see a little bit lower. The reasons are actually the same. The high inflation will talk about this further, but except the inflation, the interest rates, now the Fed fund rate is 4.75%, and most probably it can be 5%, 5.5%. There is a lot of speculations now that maybe the Fed may start to decrease its interest rates at the second half of this year. I'm not sure. Not sure because the inflation rate is still very high. Anyway, now I'm not heavily buying stocks. I buy just TLT. Also, I'll speak about this in a few minutes. And dividend stocks. The next one, Nasdaq, also poor performance. Not something impressive. Not something special for me. We may see performance since the beginning of the year, triple Q. So it's the main ETF for Nasdaq. So it's actually it's 14% since the beginning of the year. So 14 is, yeah, it's nice, but anyway, from its high level, we're still down more than 20%. So the here the bounce is not so strong. So anyway, I'm not believe in this growth in the future weeks, in the future months. I'm expecting to see the stocks a little bit lower, and here a few levels, few support levels. It's 11,000 bucks and 10,000 bucks. So maybe here we may see nice points to buy IT companies stocks. If you'll check the brand, the oil price, here the correction is continuing, but I'm still told you that my view is the first wave, the second, the third. The third's usually the largest wave in the impulse, and I'm expecting to see the fifth wave, so it's higher than 120 bucks. I'm not I don't know, of course, the future. I don't know why can be the reason for such a splash, but anyway, the technical analysis telling me that we may see another bounce in this asset. The B2C, the Bitcoin price continued to grow. Now it's 26,000. My target is 30. I told you it's in the first video of this year. Great investment for this year, by the way. I make a lot of money. The dividend, the performance, it's 57% is yield to date performance since the beginning of the year. So actually, to my target, we have a potential to grow about 15%. So if we make 15%, so yeah, it can be a great investment for me. It gave me already a lot of money. So maybe I will make another separate video about B2C, about Bitcoin, if you will be interested in this. But anyway, the target is here is 30,000. We may see that here a major resistance level is here. So let's move to the DXY, the index dollar. Here it's actually sometimes it's growth, sometimes it's decrease, but generally speaking, let's move to the DXY, the dollar index. So I'm expecting it to see it a little bit lower. and of course my target is about 92, 93 points. But now, if the Fed will flip and they will say that, yeah, we may start to decrease our interest rate, our Fed funds, so of course it very fast it can be it can go down then 100 points. But generally, my view towards the end of this year, that we may see the dollar is weaker than now. And the TLT, the US Treasury Bond ETF, it's one of my main assets, my main investment in my portfolio. My target is 120, now it's 105 and 5. Its performance since the beginning of the year 3%, but it's very safe investment, very safe asset. And by the way, don't forget that it's already paying dividends, and the dividend yield is here more than 2%. And by the way, if I'm not mistaken, it's a monthly payment. Yeah, every month here you receive a dividend from the US government, so looks very nice. Let's also have a look. Let's have a look on the euro, on the pair of euro to dollar. So now it's 1.06. Let's move to the monthly time frame. So here, since 2008, it's a decreasing channel. Yeah, you see. And now we traded around near the major support level. It was a resistance level, but it's 106. So if you break it down, there is a nice road to this target. It's 80, 90, 80, even 85. So it can be the lower border of this decreasing channel. I'm not sure now, because if the Fed will flip and they rechange its monetary policy, of course it can be the case. It can be the case, but my target to see here is low. This pair is lower than 1. We'll see, but anyway, pay attention to this level. Here is the major support level for the last 8 years. And before I forgot, so here look, it was released the data for inflation. The inflation US target US inflation rate. So the annual inflation rate in US slowed to 6% in February 2023, the lowest since September of 2021, in line with market forecast, and compared to 6.4% in January. Food prices grew at a slower rate, while the cost of used cars and trucks continued to decline. Also, cost slowed sharply for energy and fuel oil, with gasoline prices falling 2% after a 1.5% rise in January. On the other hand, prices rose fastly for electricity and shelter. Core inflation, which strips out the cost of food and energy, edged lower to 5.5%. It's also can be considered as a positive sign compared to the previous months. The CPI rose 0.4% following the prior 0.5% gain and also matching forecast. The core rate, however, edged higher to 0.5% from 0.4% compared to forecast of the 0.4%. Inflation in the US remains 3 times above the Fed's target of 2%. And it's the case sentence here. So okay, we see the inflation decreasing in the US, but still is inflationary environment. The average inflation in this year is 6.2%. Okay, so it's a lot. It's generally decreasing from 9% to 6. Okay, it looks nice, but the pace, maybe the pace is decreasing, but still the inflation about 6%. It's a lot, believe me. So I'm not sure that the Fed will start to decrease its Fed fund rate in the near future. I guess maybe 2 quarters from now, maybe 3 quarters from now, they may start. They tell so okay, basta, we finished our monetary policy tightening, but still, when I see high inflationary environment, so for me it's hard to believe that the Fed may start to do it. Of course, in this week we saw a lot of bank crashes in the US. Actually, one European bank, the Credit Suisse, was under trouble, but the European government told it, yeah, regulators told it, don't worry, we'll help you, we'll give you money. So also I heard that there is a possibility that the Fed somehow, all other banks will inject to the financial system about 300 billion bucks. It's rumors, I'm not sure, but anyway we see that now the S&P 500 traded at a level of a very neutral level. So it's, I guess, everything except that look, we still have inverted yield curve. The 2-year yield is higher than the 10-year yield curve, but I guess here this difference, it's here it's not so, it was more than 100 points. Now it's less, but still it's a red flag for upcoming recession. So pay attention to the US Treasury yield curve. So if you like this video, press the like button. See you on the next time. If you like dividend videos, if you like stock market analysis, technical, fundamental, so of course subscribe to my channel, and bye bye.